Hey everyone, welcome back to the channel. Today we're going to pull together a model on Alibaba. Probably going to be a two-part series, I think. I think the first one we're just going to go over making the revenue forecast. So if you want to see how we get those revenue forecasts, watch this first video. If not, go ahead and skip on to the second one. In the second one, I'm just going to show you kind of the tweaks I did to pull together the whole DCF and then the valuation we end up getting there. So right now this is set up, the DCF, with just basically holding everything constant. And we get about a $380 billion valuation. I think last I checked, they were 650 or something, 613. So you can see, like, if they just stay currently how they are, really not that far off. And I'm using the cost of capital that we got from my WAC video, which is probably a little bit generous, but let's hop on over to the income statement. And we're gonna really focus in this video on top line revenue. I think it's easy to get in the weeds and try to calculate the gross margins for each business unit. And in their 20F, they do provide us some pretty good data, but it's like revenue and then income from operations for each of their divisions. The problem here is like they don't break out how much of this is like G&A, product development, cost of goods. I mean, obviously with share-based comp being big piece of at least the cloud computing, you could guess that, this business, the COGS is probably about break even right now, in some of the other ones, but I think it's easy to get really caught in the weeds here and try to calculate each business unit at, kind of the margins for each business to get a bigger COGS level. I think I'm just going to drive COGS improvement as time goes on. And you can see also in their 20F, they give us some pretty good detail on the subsegments. So they break their business out into total core, cloud computing, digital media, innovation, initiatives, and other. And I think we really need to understand these business units before we start making assumptions. So I'll quickly kind of go over them. And I have some notes here that I pulled out. So total core commerce, I mean, this is their commerce business basically, but their China um, commerce retail, right? This is the big piece of it. And what this is, they actually break this out for us. This is in three segments. This is customer management, commissions, and others. So customer management is really an advertising business. I didn't realize this, but it's, you pay to have your products advertised on their platform, and then they get paid cost per click. So, very similar to like a Google kind of thing. It's just advertising on their platforms. The next piece is commissions. So anything that's sold on their platform, they get a commission between 0.3 and 5%. And then other was just like miscellaneous other things, which, I mean, obviously it's actually grown pretty big here, but um, in comparison, it's still pretty small to the other two pieces of the business. China Commerce Wholesale, this is mostly membership fees, so probably a pretty fixed revenue base. It's going to be slightly growing. You add new members every year, but that was the main driver. International Commerce Retail, this is just direct sales and then commissions, and then a little bit of logistics revenue. Wholesale, this is membership fees as well. So, these people are paying a fee to be on the platform to sell. Logistics, this is correlated 100% to volume, is what they said basically. They connect merchants and logistics companies, and the more connection they do, they work as like a middleman and take a cut. And then local consumer services, I thought this was interesting. This is on-demand delivery and commissions related. So think like Uber Eats, Grubhub, Instacart, that kind of thing. But I think also not just like groceries and food, but all of their products. So it'd be basically like it's like 2 day delivery, right? I mean, it's same day delivery from them, or quick delivery. So it's like Amazon Prime in a sense, like that membership you pay in the US for a 2 day delivery. That's really what this is. It's people just paying a fee to have something delivered quickly, and then a small other piece. And then they had cloud computing, which we can see is actually growing pretty quick. It's doubling every year, which is, I think, very impressive and very exciting. Digital media and entertainment. I'm guessing this is similar to like Amazon videos. That's what they made it sound like. And they said they brought in like Alibaba Studios a couple of years ago, and that's actually a big piece of why this jumped. They started consolidating those financials because it was a subsidiary into the broader group. And then innovation initiatives and other, it's just like kind of their little small startup business. A lot of just different things, but mostly consumer and enterprise. So I think understanding these pieces are big because we're going to try to, forecast these out based off kind of what we think are big drivers, um, and kind of see where we get. So I'll hop over here. I think the first thing, customer management commissions, others. So this is the biggest piece of revenue, right? I mean, this is Maybe other we should actually look and see if they give us a better breakdown. Let's go to page 132 real quick. Um, might be good to understand what the other piece is, just so we can really try to make a good prediction there of what's driving it. Let's see. Others. New retail and direct sales business. So it's just product sales, commissions, transactions. So it's similar to the other stuff. Um, so I think, when I first looked at this, I think the big thing here is commission and other needs to be tied to their GMV. Um, so here they gave us GMV. Really, Tmall is probably, if I had to guess, actually more related to the other based off what we just read right here. I think it said it's Tmall supermarket. And then the other piece is probably more tied to their other commissions business. And that would explain why, if we look at it, right, this just passed it. The GMV is basically the same size now between these two, but the other has a few other product lines. So I wouldn't be surprised in the future if they break out the commissions in this other. So let's go ahead and bring over the GMV from our other tab. We'll actually, here, let me just to baseline, if you're watching this, all these numbers currently are in RMB, and I have a calculation on the DCF where we convert it back to USD. So they give us in their 20F what they believe is the rate they use when they make conversion, 7.0808 RMB for every 1 USD. So basically you just take all these numbers and divide by 7.0808. And the reason I left the numbers in RMB is if you go back and you want to dig around in the 10K or 20F, sorry, not 10K, and you're trying to tie out the numbers, it's just way easier if these numbers are in RMB, and then there's just one conversion at the very end, as opposed to you could do something like 7.0808 if you like Control C on this and then you highlight everything, you go Alt ES, and then you could do divide, but that just it starts screwing up everything. So chose not to go that way. So I think first we predict the GMV growth, and then we look at these pieces and how they're growing in relation to GMV. And then from there, we can predict out kind of these years. And then this probably grows in relation to GMV as well. I mean, if we look at it, I think that's probably a fair way to look at it. So we're actually going to calculate these growth rates. So we'll just paste this down here real quick. And we will link this up. Okay, well, there we go. Got the growth rates now. Just paste formats real quick. And I'm kind of curious at how total GMV is growing, to be honest. I don't know. So, right, I mean, commissions looks to be very much, I mean, at least in 2020, growing with GMV. The rest of it is actually growing a little bit faster, which I think is a very good sign. And, maybe just add two of these real quick. Let's calculate the growth for these two as well. So it looks like commissions, grows about twice as fast as the GMV growth in revenue dollars. So they're probably just, higher commissions, larger the platform is, the more you can kind of charge, things like that. And then it looks like the other piece, this is total. So I think first the big thing is like, how do we think GMV is going to continue growing? And what's interesting is Taobao looks like it's kind of like leveled off really, right? I mean, it's still growing, but in comparison to this where it's growing 20% a year, that platform may have kind of stalled out. So I think first let's, I like the idea of doing this and subtracting percent, and we'll do that till we get to about 5%. So 5% to me, like really is like you're growing a little bit faster than inflation, nothing crazy. Um, like, you're still expanding, things are growing well, but you're not growing like gangbusters. And usually that's like the sign of a big, healthy, mature company, right? Like if you were to look at like a Coca-Cola, a Microsoft, I mean, maybe not Microsoft because they have this big cloud computing push, but um, like Microsoft hardware, I would think is probably like the slow growing 5%. Coca-Cola, Procter Gamble, like these big companies that sell kind of, they're very saturated in the market, and I think it's harder to continue growing here. Um, for this one though, I mean, this looks pretty impressive. I think I might just actually take it and subtract 2% a year. So I tend to be more cautiously optimistic, I would say. Like I don't want to assume they're going to keep this growth forever because I don't know, part of me is just kind of, I'd rather be conservative than aggressive. And then if I still get a reasonable price, then it's like, okay, look, I'm feeling being conservative in my estimates. You can probably be a little bit more aggressive and there's probably even more upside. But with conservative, if you're not getting there with conservative estimates, and you have to get there with aggressive estimates, I feel like you just lose any, kind of margin of safety that you could have had, and that can make things a little bit scary, to be honest. So there we go. Let's do that. Sum all this up, and I think what I want to do here now actually is, I have these growth, which is great, but I don't care as much about that, to be honest. That'll just kind of get a good idea. I think I want to look at these three. I do want to look at these three, but I want to look at them. I want to look at their revenue as a percentage. So let's do, and something to note, this is in billions and this is in millions. So actually, maybe let me convert this. Oops, I guess I actually, okay, there we go. So let's look at their, so I think for customer management, let's do this over total, and it's going to give us a percentage, kind of, how much are they making on their platform when someone uses it. And I think this is how we're going to really forecast this piece out. What the heck am I trying to do? There we go. Commissions, I think commissions is probably actually better done against Taobao Marketplace from just kind of what I'm seeing. And I think that's in line. They said they make, and I can go back over to the page, but let's see. Taobao Marketplace, they give us advertising 0.3 to 5% is the commission on this. So we're getting, somewhere kind of middle of the range there. I think that's fair. And then other is really, I'm going to tie this to Tmall. Tmall. I'm going to expect this to be growing, to be honest, the percentage, because there's other revenue in here as well that I think is helping it. So it's not just benefiting from the growth of the GMV growing, but there's other stuff in that business line as well. So I think from there, what we can do now is let's forecast these out, and we'll just keep it pretty high level to start. Nothing too crazy. And I mean, honestly, like the average here has been 2.5, it looks like. So I'm just gonna set that 2.5%. Commissions, set that to, I think 2 is probably fair. Set that to 2. Other, I mean, this is what's growing. And I guess the question is, how fast is this going to grow? Because the commission piece is going to stay flat within this. So it's kind of the other ancillary business. And if we kind of look at it, I would say, if we look at just the GMV, right, it's about the same size. So if we were to assume there's probably 15 billion of other stuff in here, really, that's like driving growth on this year. I mean, you could probably come up with a calculation there to really get at it, but I think we have to have it grow, and I'm almost wondering if I can back out the other portion. I mean, that'd probably be a lot of work and not worth the effort. So maybe I'll just do this and have it grow 0.4% a year until it gets to like, I don't know, 4%. And that might be super aggressive. I don't know how fast this other business can really grow. And once again, let's just, what is it? I mean, this is direct product sales. Okay. So as this grows, revenues drop, or not revenues, margins drop. But now we can go ahead and set this up. We're going to do percent of GMV, total GMV times this. We'll see what kind of numbers we get and see if it's a bit ridiculous. I mean, I don't think that's too ridiculous. You have it doubling in a decade, a little more than doubling, and it's, gone up, what is that, 60% in the last 2 years. I think that's probably fair. So commissions, we're going to do this one times the 2%. So obviously this really just depends on them taking market share and more consumers continuing to buy products online. That's really the takeaway from what this analysis is telling us, is consumers are shifting rapidly to digital shopping and going to continue. And I think, it's probably fair. But yeah, we have it tripling in the next decade. So definitely aggressive. But considering they doubled in the last 2 years, maybe look, we have them doubling in 4 years, and then from there only growing 50% on that in the next 6 years. I don't know. I think it sounds aggressive, but I actually think it's probably reasonable and fair if you're a believer in the digital economy and think things are going to continue to scale. Um, these next ones, I think these ones are a little bit. So if we remember, China wholesale commerce was membership fees. So I think that this is a pretty straightforward one for the most part. Like whatever this, so it's decreasing, but 15%. I think maybe we take this, have it decrease a little bit slower. I think they, continue to add people onto their platform, and then just kind of level off. Oops. And everything that's in blue on here are the main drivers for assumptions. So feel free to come in here and change these at your own discretion. Let's just copy these down real quick. Got it. That's new. Delete that one for now. Okay. International commerce retail. Let me just review my notes. Direct sales, commissions, logistics. So, I mean, I think the problem here is you could tie this back to GMV somehow. I think it's probably hard because they don't give us quite enough detail. But it looks like it's grown 5 billion a year. So I don't know, that one, I think that one's pretty tough, to be honest. Let me just link all this up real quick. I think without more kind of detail around some of the GMV assumptions, it can be a little bit tough to really break out the commercial or the international commerce piece versus the US. But I mean, honestly, I would imagine they continue to grow their international base. I think from a US perspective, this was kind of like the only thing I really had known was like Alibaba, from the standpoint, I always heard like, oh, they're the Chinese version of Amazon, which is fair, they are. But I always thought like, oh, everyone just goes on Alibaba and buys 2,000 pieces of some random thing. And, when you think about it, like that doesn't actually make a lot of sense. Like clearly they have other things that are selling direct to consumers. And that's what Tmall and Baobo or Taobao are. So I don't know. I think this continues to grow. They continue international expansion. Commerce wholesale, this is fees. mostly fees is what they were saying. So it looks like, I don't know. I think a lot of this you could really spend a lot of time trying to figure all this out. I think for now, the big one I think makes the most sense that oops, did not mean to hit help. Makes the most sense to forecast off GMV. And I think it's also the biggest driver of revenue, right? I mean, it's over half the revenue comes from this one business line. So I think spending the time there to really get a good fundamental grip on it is a good idea. And then I think the other big piece we have to look at is going to be cloud. So we'll spend a little bit more time there. But for some of these other ones, I think it's probably just as easy to make some high level assumptions. Logistics is an interesting one. That's like been a thing that grows pretty rapidly. You know, as they introduce the platform, more users use it, the platform gets better. So maybe we kind of go this way, have it level off down into a 4% range. And I think like, you know, these might be pretty aggressive, and you could go look at some other logistics companies and see, you know, how much are they doing in logistics in China, and is this reasonable? But it's a huge market. This is just such a tiny piece of the business, but I mean, it actually grew very quick, which is surprising. Um, so, I mean, I don't know what the local demand for logistics services is, but I don't see, because I mean, you divide roughly this number by 7, and that gets you what, 3.5, something like that. So 3.5 billion a year in logistics services. I'm not entirely sure how big like a Uber Eats or an Instacart is, but that sounds really big to me. And let's just, I mean, this is gonna make it a massive business, right? Like probably, you know, something around 5%. Um, Others, I mean, that's not one I really want to forecast, to be honest. I don't like assume, like, I don't know. Not a big fan of forecasting other stuff, but anyways, cloud computing, I think this is an interesting one, right? So let's just do some quick math over here. This divided by 7.808, I think is what it was. So it's a $5 billion business. Let's just pull up real quick, like Amazon cloud revenue. How much revenue does Amazon do? 13 and a half. Is that for full year? 13 and a half in 2020. So that makes this 1/3 the size of Amazon. $16.7 billion. So definitely still a lot of growth to be had here, without a doubt. Um, you know, I wouldn't be surprised if this thing catches up very quickly to the size of, especially as, you know, I think they have probably a stronghold in the, oops, what did I just do? One plus. They probably have a stronghold in the Chinese market. Oops. And then just for like a sanity check, let me do this. 0808, there we go. So that grows it to only 10 billion, and we don't have a growing past here, so let's do a little bit more. And I honestly don't even think that's fast enough growing, right? If we're saying Microsoft and Amazon are already 15 to 20 billion dollar businesses, roughly, is what it sounds like, them only getting to 25 billion is probably on the low end. So, and getting to 55 billion is probably on the high end. So it's probably somewhere in the middle. Um, 30 billion. I think that's fair because I would imagine Amazon and Microsoft will definitely more than double their cloud businesses by 2030. So for them to accelerate at this kind of pace, um, I don't think would be surprising. I think cloud is kind of the way of the future, and I think with less and less players, and as people get more ingrained on certain cloud infrastructure, and I think China definitely, like I would imagine Alibaba is probably one of the biggest players there, and with just such a big country, and I know there's a lot of focus there on kind of startup and innovation, at least from what I saw when I went there a couple of years ago. Seemed like they were really heavily investing, but maybe I just saw one side of the story. But um, I think that seems reasonable that they can take most of the or all of the Chinese market and then probably some of other parts of Asia as well. I don't know if they'll ever compete in the US heavily. I would be surprised on that front, just due to political tensions, but everything else I think is probably reasonable. Um, outside outside of the US, I could see them doing pretty well in Asia and being a leader in the space there. Um, so let's go ahead and I know my China comment there was completely anecdotal based off my experience going there and thinking I saw a lot of innovation when I was there on a trip related to business school where we went to startups. So anyways, let's look at innovation initiatives and others. I mean, this has been growing quick, but once again, I'm just not crazy about forecasting these things where they give you like zero visibility. For all I know, this is like some self-driving car, or like, you know what I mean? Like who knows what this stuff is, and if it's actually going to pan out, if it's going to be spun off into some other company that you're going to have no stake in, anything like that. So, anyways, I think that that's probably a good high-level first pass of revenue, and we have it about a little less than tripling, which if we take our same formula, that's pretty big. 200 billion in revenue. For reference, I think Apple last year did like 360 billion. I think Google is probably somewhere in this range. So you're basically saying the one of the biggest tech companies in China is going to catch up to where US companies are today. Honestly, that's probably like conservative, pretty conservative, right? China is expected to have incredible growth. If that growth actually materializes and, you know, they're there to pave the way, I don't see why they can't be as big as an Amazon, a Google, something like that, an Apple in China, because they already have the head start in the market, and now it's just like getting the market developed and continuing to grow. But based off that, let's just quickly link this up, and then that'll be the end of this video, and then next video I'll walk you through how we built out this DCF, because this one was a little bit of some weird math if you go try to recreate it. But based off this, which honestly I think this is pretty conservative, and let me just confirm real quick what my WACC was. WACC, Alibaba, here we go. So we calculated the WACC at 6.8%. So let's paste that in. You get a $950 billion valuation. Now, I think a 6.8% WACC is incredibly low for a company like Alibaba, but that is what it is if you use CAPM. I think there's a lot of political risk in there, and then just the whole structure of the entity that you're not actually buying Alibaba itself, a lot of risk in there. So just something to consider. And you can see based off how sensitized. So this is USD, this is in RMB, 950 billion. If you, apologies, let me actually copy that over. If you actually trust that WACC, right, 827 billion. And currently they trade at 600 billion. So definitely a lot of upside there. Now, my argument would be the upside is definitely probably based off political risk. And these assumptions are all pretty conservative. So I'm going to stop the video here. Let me know if you have any questions about, some of the revenue forecasting. And you can see here the total revenue growth. We have them going from 50 to 30 to high teens, kind of regressing down to being a large, just slowly growing company. As we mentioned, this ends up being $200 billion USD of revenue, which is pretty good size revenue. But we'll stop the video here, and in the next video, I'm going to walk through the assumptions I've made in here and just show you actually how we linked up this model, because I did back some stuff out of some of these numbers. So if you download it in the description and you're trying to follow along or recreate this somehow, you may have some issues. So thanks for tuning in, and we'll catch you in the second video as we talk through the rest of the DCF and refine some of the assumptions in here. Thanks.